And I believe, this we can, our coming generation can definitely train themselves. And I can tell you, we are very agile economy, very agile people. The IITs will soon have all those modules and everything to train. So I'm very, very positive, and I think next generation will not have problems. See, this is a backward looking problem. So you have come and hit something which was in that middle side. AI has taken, as I said, it directly jumped the chain from machine language to the natural language. So you have made middle side completely irrelevant.
So when you say jump the chain from machine language to natural language, can you tell me more? What do you mean?
So basically, see, what the machine understand is binary 0 1, right? And then that is a code language. Then you move to assembly language where you have syntax. So basically, science, right? MOV or those kind of commands. Then you have command language, and then you have coding language, which is C++, all Java, Python, everything. And then that language you can type, and also that is called high level language, which you understand as a user. What have happened is that directly from that code language, we have every place where every shift from code to assembly to line to command, there were people who were required. Now what has happened, this is automatically coding. That is what AI is coding now, 30% of the codes. So this is directly coding. So from machine, you're directly going to natural. So all the jobs in between, they have been hit very hard. So it is basically algorithms are doing everything which humans are doing. Let me put it that way. So the hit is in the middle. So solution has to be in the middle. You can't solve entry level recruitment to solve this problem. It can't happen.
Correct. So, in terms of job creation, right, over the next 3 to 5 years, how do you see more jobs being created? Because that is the big problem that India is facing given its demographic dividend. What kind of jobs do you think will be created with the advent of AI? And how do you see things play out?
So I would say that the fresher intake, which is right now a little lull, and it is little down because, as I said, these companies are come at the end of the problem to tell, because they wanted to solve things to the best of their abilities, and they have done that. Now I think after some time, maybe 3 4 quarters, we will again see pickup in hiring. And if you see, there are a lot of negative news, but also if you see Infosys there announced that they will still hire a good number of people and all. So I think that fresher hiring will come back very strongly. I don't see a challenge there. Maybe 6 months, 12 months later. I'm not talking about 2 3 4 quarters, but I'm very confident in a year's time, fresher hiring will come back very strongly. I don't see challenge there. But now fresher hiring and then the middle and senior level, there will be still some exits which will keep on it will be voluntary and involuntary attrition, both of which will happen. So the net addition number you may not see very big, to be honest. But intakes will be good. Middle and senior level will be adjusted. What is left is asked to leave or whatever, involuntary, voluntary. And so net addition numbers will not be very exciting for next 2 years in my view.
And you were showing me the chart where TCS's revenue per employee has actually gone up in the last few quarters.
Yes.
So do you think in terms of, like, I'm now looking at it from an investment lens, right? A lot of us have invested in IT companies over the last 10, 15 years and made sizable money. Right? But now the terrain is changing a bit. So from an investor standpoint, do you think IT stocks still make good investments, or do you think it will just be, a dividend play?
So very interesting question. So I will tell you the mature part of it. So for example, if you see 224 is our IT exports now out of 283 billion, which we total IT services revenue of India. So the outsourcing space, right? And there is BPM clubbed in it. But if you remove the BPM from the denominator and numerator, then you will see that we are broadly, almost like 85-90% in terms of penetration in the outsourcing space. So you can't penetrate anymore. So it is only dependent on the incremental spend which is going to come. What is happening right now? The incremental spends are going to the hardware, as I said, because Microsoft alone buy 20 billion chips from Nvidia alone a year. So there is a volume, and there is only one chip, Hopper chips. So all of them are buying different chips. All this Five Guys, Oracle, Amazon, all this together buy more than $100 billion from Nvidia. So the hardware spends are going up after a long time, and software spends are not that much. So I think from that perspective, for us to grow in double digit for the large names will be tough. Large names can grow between 3, 4, 5% for next 2 years. That is what my sense is. But this time, all the tech transition in the past, the first turnaround always used to happen from the top, right? The large cap, we were the first to turn around. This is the first time in tech transition people who have right size or who have the lowest net addition last 3-4 years, they will be the first to recover. So this time the ship will be from the small will do the best, mid and then large, because they will be it will be easiest for them to cut down the middle part or the fat part of it.
Interesting, interesting. So you said hardware spends are going up, software spends continue to be low.
Correct.
So investing in IT companies at this juncture may not be the best thing to do, given that you don't expect outsized returns from these.
Large cap, it will take time, but small and mid cap, you have to go by data, and there is a lot of data. I don't know PMS. I can't give you name of stocks, but there's a lot of money to be made in small and mid cap also. So you have to just find where the sizing is right, where the net addition is not too much, and it is broadly same and all. That is the place, because they have done good right sizing, and it will be very easy for them to, cut down that middle part and do well.
So the dream run in the large cap IT stocks is done, you think?
For the time being, yes. You will not see big dream run. I'm not talking about stock run, but the revenue and growth and those will be little muted. But because, for example, TCS last 5 years return, CAGR return in the stock is 5-6%. Infosys will be 8-9%. HCL Tech will be 10-11-12%. And despite COVID, bundling up and giving all the spends.
Correct.
So returns are limited. Going forward, next 2 years could be limited, but because the stocks have gone through time correction and price correction, at some point of time, investors will want to have dividend yield stocks for safety, quasi cash, whatnot. So those things can happen. Also, now interestingly, when I speak to so many fund managers and investors, I come to know that, some of them started treating IT as a FMCG an alternate, because they say that for similar 5-6% growth, rather than paying 40 multiple, we'll be happy to pay 20 multiple to IT. So this can be our new defensive or quasi cash in the portfolio versus FMCG. So because of those things, they may not fall much. Let me put it that way.
Okay, so IT is now moved to becoming the defensive play. Wow, that's interesting. You were telling me earlier, Sandeep, that it took only 4 years for Nvidia to see a massive jump in revenues, right? So 3-4 years is good enough time for a company to turn around in a big way.
Absolutely.
Do you think that companies like TCS and Infosys, that for the longest time, people were complaining that they're not investing enough in R&D, they're not investing enough in product, they just remain a services play for the longest time. So there's no innovation. Do you think that turnaround can happen over the next 2 to 3 years?
So see, a very interesting question, and data supports that. So if you see 2021, Nvidia's revenue were lower than TCS, right? And but their R&D spends were much higher at 4-5 billion, and TCS was spending around 27-2800 crore, which is less than half a billion, and that a lot of money was going in innovation centers. So I think, but from there, Nvidia suddenly, because their product has become successful, so we cannot absolutely compare, because we're in different businesses. In product business, it is a hit or miss. It is like drug approval. Something they did well because if you picked up, so they are there where they are, and they are making absolute crash on the margins, like 60% margin they are making. How can you make that kind of margin on product for a longer time? AMD will someday come and definitely give them a tough time.